guys, welcome back to Sheila's World. It's been a minute. Yeah, I've been missing in action for a while, but I was just around. I was gathering more information about investments, and life is busy. Sometimes we get busy and we can't really have a video every week, but anytime we get a moment, we have to make something for you. I'm here, and today I'm sure you're gonna enjoy the video. And if you haven't subscribed, please hit that subscribe button before we begin. And for the new people, welcome to Sheila's World. This is where you get all your investment questions answered. Those people who want to invest, those people who want to know about the new products in the market, this is the place to be. So hit the subscribe button and the notification bell so that whenever I upload, you get notified. So today we are going to talk about something. I know most people will always want to know more about the money market funds. That is the main investment that majority of you are interested in, and I know those who haven't joined yet, they're still getting mixed ideas out there. And so I came across a number of people who were asking me about, Sheila, can you advise us about the best investment, the best money market fund currently that we can invest in? And for sure there are so many out there and you might get mixed up. I'll just give you a checklist for you to decide which money market fund to join. I'll give you a checklist on what to look for, because there are so many. Even if you go to Google right now and say the best money market, there are so many that will pop up, and so far, as for me, I think those are not the best. The best are yet out there. So every blogger will come up with their best. So with you as an individual, before you invest in any money market fund, these are the checklists that you need to look out for before you invest in any, because some will come up and maybe some are even pyramid schemes in the name of money market funds. So be very careful before you invest in any money market fund. There are so many currently popping up every day, and some are not even regulated. So I'll give you a checklist on what you need to look out for before you invest in any of the money market funds. And so there are over 25 money market funds in Kenya. And if you're not careful, you might fall in a trap. And I remember not long ago, there's a company, one of the companies that was offering that same product, the money market fund, really disappointed millions of Kenyans. And it's because people knew they were investing in a money market fund only when the COVID struck and people really needed their money urgently, they could not access their money. So I don't know if that was a money market fund or they were misled. So you need to be very careful even when you see those attractive interest rates, because you might be moved by interest rates. You find one company is advertising that we are giving at 17% and others are giving at 10%. So you go for that one without really doing more of research about the company. So this is why I decided to come up with what you need to look out for before you invest in any money market fund. So sit back and have your pen and paper ready, and also subscribe and hit that like button as we continue. So as I said, there are more than 25 money market funds in Kenya. We have the old school ones, the ones that have been there for years, and we also have the emerging ones that are coming up. Even I think in this just 2024, we have like more than 3 companies that have started their money market fund. The fund managers who started the money market fund accounts. So, and that's why you have to be very, very careful. And there are considerations that you need to look at when you're selecting a money market fund. And I'll just go straight to the point. And one of the main things that you need to look at first is the regulatory compliance. Yes, any money market fund that you are looking into joining, make sure they are regulated by the Capital Markets Authority of Kenya. That will ensure some sort of protection. You are sure of your money is safe because there's a regulator in place. Then another thing that you need to consider is what are your investment objective. The main objective of a money market fund is, one, to preserve your capital and earn you some interest, and also liquidity, in the fact that you want to access your money whenever you need it. The main important thing that also you need to consider is the risk assessment. How is your money invested? Whenever you see a company promising you very high return, which I've seen in many companies, like we are offering 17% money market, you need to understand what is the risk factor there. How exposed is your money? Because anything with high risk means this. Anything with high return means there's also there's a high risk involved in your investment. So are you ready to take the risk? someone might promising you 17%, but are they really investing what is the underlying asset? Are they investing in government, or are they investing in real estate? So anything you're investing in, try and find out what are the underlying assets, so that you're able to know the risk profile that you are taking. You might not be an aggressive investor, so maybe you're not willing to take high risk. So you need to consider that also. You need to understand your risk profile before investing in any money market fund. Then one, as I said, quality of the underlying asset. How are they investing your money in high risk assets or low risk assets? So for money market, the best money market, usually they invest in government bonds and bills. So that is the low risk investments. But anyone investing in real estate and they're telling you they're investing in money market, that's probably they're exposing your money to risk. So you need to find out about the underlying assets, and also you need to know about the expertise of the fund manager. The new upcoming companies that are carrying out money market funds, do they have the expertise that the older companies have? You see, experience is the best teacher. And you might find, let's say, a company like CIC offering 11 or 12%. Then another new company just come up, they're offering a 17% return. You might run to that 17%, but what are the risks involved? Do these people have experience in investing money for you? Big companies, why are they not able to offer the 17%? Because then it's not sustainable. So you need to look at that, considering, don't just look at the high returns. Look also on the expertise of the fund manager. Fund manager is the company that is investing your money. Do they have experience? How long have they been in the market? So those are the things you need to consider first before selecting a money market fund to invest in. So I hope you, in case you have any questions, you can drop it in the comment section, and I might be able to get back to you. So another thing is the asset base of the company. A new company that had just come up, they don't have a history, they've not really invested, just their first time in opening the company and setting a money market fund. What is the asset base? Asset base ensures that your money is safe. There's stability in the company. So find out about the asset base of the company you're investing in. And that's why I'm never bothered by when you go to Google and it tells you this is number 1, number 2, number 3. That one doesn't really matter. What matters is go deeper and find out about the fund sheets of the company. What is where are they investing? What is their asset base as of now? For how many years has it been in the industry? Has it been operating? So there's so much more to investments rather than just returns. Returns are just a product of, like a good company, what they offer you after investing money for you. So you need to look more deeper than just interest rates. Then you need also to look at the analysis, returns analysis. Are you able to have let's say the last 5 years statements of that company? If there's no history, then don't base your investment decisions on the current, what you're seeing now. Even though the past performance may not project what is the future will give, but it's safer when you have a history of how the company has been performing. Is it a losing company? Is it a growing company? You'd rather have 10% with a stable company than 17% with a company that has just started, doesn't have any history. How sure are you going to be sustainable? So to me, I'd rather look at the history of the company. I do the analysis of the returns so that I'm able to make my decisions well. So another thing that you need to look at also is management fees. Different companies charge different fees when it comes to managing your funds. There are some that charges higher, others low. So you need to find out which company charges at least a minimal, because you also need more return. So be very careful. One of the companies that you might think is giving you higher, they might have just posted their gross interest but not their net. And maybe other companies that you think they're giving you lower, they've already considered in their interest rates, their management fee, and their tax. So you need to find out about the management fee, and also whether the interest is compounding. Is it are they compounding the interest, or is it a fixed or flat rate? So a good money market fund should have the compounding effect, since that is what ensures that your money grows. So find out whether they're doing simple interest or compound interest. I know with most banks they offer simple interest, and that's why I prefer by investing in money market funds with the insurance companies, because majority I know they do compound interest. So those are things that I know most people don't look into. They just look at the returns in general. Then also how easy is it for you to access your money? That's another thing you need to consider before joining any company. I know you might not know because maybe you've never been invested in the company, but through maybe friends or people who've been in the company, you're able to know how fast can I get my money when I need to withdraw. It should not take you more than 3 days when you are asking your money, you're trying to withdraw from your money market fund. It should be maximum 3 days. Some instances it even takes just a few minutes if it's M-Pesa, but it depends with the limit. So you need to know how easy is it for you to access your money when you need it before you invest. Then another important factor is what is the minimum investment amount. Different companies have minimum amounts for you to start investing, and thank God nowadays most companies have really lowered their minimum, and even someone with 100 shillings can start saving in a money market fund. So it's now it's reachable for everyone. Everyone can afford to invest in a money market fund. All you need is discipline and have investment goals. Don't just invest without a goal. Then another thing is with the digital emergence, how digitalized is the company? Are you able to sign up, deposit and withdraw without filling a lot of papers? But the main thing is you should have an investment objective. What is your objective when you are investing? Are you investing for short term? Are you investing for medium, or is it long term? So based on all those, you're able to select the best company and the best product for your investment. So don't just get into investments blindly. Let's learn to take time and look around, and also even visit those companies. You're able to get more ideas on what you can invest in. So far, if you need any recommendation when it comes to the best companies, hit me on the inbox. I'll be able to recommend to you the companies that I think so far they are the best and where I'm also investing. So I hope you've learned something today, and let me know in the comment section what you'd want us to talk about next time, and I'll get back to you. Have a good day, and if you haven't subscribed, please subscribe. It's bye bye for now.